Okay, so now we go to percentage tax and documentary stamp tax. These are not usually asked in the bar. I think they are excluded, right? But you should know the principles. One or two questions might be asked. So for percentage tax, if you are not covered by the VAT system, then obviously you would be under this percentage tax. That is for those who earn income from business or from the practice of profession. For pure compensation earners, you're not covered by this. And you have this, usually it's 3% of the gross sales or receipts. But there are rates there. You don't have to memorize that. There are lots of rates. Like in the bank, you have this 5%, 7% gross receipts tax. That's other percentage tax. And just remember, I think this is the M. Louvillier case wherein the Supreme Court said pawn shops are liable to percentage tax, not VAT. So again, if you are not covered by the VAT system, for those who receive 1.5 million or less, then you're covered by percentage tax. For those who are into business or in the practice of their profession, okay. Documentary stamp tax. Well, this is the persons primarily liable are what? Are the persons making, issuing, signing, transferring, and accepting the mista. So if should these persons be exempted or should these parties be exempted from paying tax, the other party who is not exempt would then be liable. That's Philacor credit versus CIR. And this is the meaning or the nature of the DST. You just read this. And you take note of the fill invest case class because instructional letters, journal entries, or cash vouchers involving advances are considered documents which are subject to documentary stamp tax. You remember the advances that wherein the CIR imputed theoretical interest. So the CIR based the theoretical interest on the cash vouchers or the IOUs. So it's really on the document. Doesn't matter where it's written, maybe written on stone. You remember what a document is, right? It confers a right and it imposes a liability. And you just familiarize yourselves with Section 199, documents and papers not subject to stamp tax. But you take note of Section 201. This might be asked. The effect of failure to stamp taxable document. If an instrument or document required by law to be stamped, which has been signed, issued, accepted, or transferred without being duly stamped, shall not be recorded, nor shall it, or any copy thereof, or any record of transfer of the same, be admitted or used in evidence in any court. Can't use that as evidence. And for notary public, you are not authorized to affix your signature thereon if the proper documentary stamp tax are not yet affixed and cancelled also. But there's this, well, I've explained this to you, but this is the provision of the law, Section 201. And for the merger, you remember the CIR versus Latondeño, we've discussed this earlier. If there is a merger between two corporations, then it's not because Section 196 covers sales or conveyance or transfers. It does not involve merger. So the emerging corporation or the surviving corporation would then assume the liabilities and assets of the other corporation. So there's no sale there. And it would not then be subjected to documentary stamp tax. And the other one, there's this interesting case in of the HSBC versus the CIR. Bank transfer not subject to DST. You know the electronic bank transfer, the wire transfer, you wire money to other person. It's not subject to DST. Okay? Because they argue that yeah, it's a negotiable instrument, etc. So but it's not. So it's not covered by the documentary stamp tax. What are the others? Well, yeah, we've reached the end. I like this code class, so you just remember this. Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules and they have no respect for the status quo. You can quote them, disagree with them, glorify them, or vilify them. About the only thing you can't do is ignore them because they change things. They push the human race forward. And while some may see them as the crazy ones, we see genius because the people who are crazy enough to think they can change the world are the ones who do. It was credited to Steve Jobs or maybe the Apple. So that's it. Next topic we will discuss remedies for the NIRC, local government code, customs code, and Court of Tax Appeals. Okay.